It's time for a deep dive. Number 5, Warren Buffett. The brutal drop in oil prices caught even the savviest investors flat-footed, including arguably the most seasoned of all. The chairman and CEO of Berkshire Hathaway was thrilled with stakes in Exxon and Suncor and his Burlington Northern Railway serving the North Dakota Bakken oil shale. When oil traded above $100 a barrel, it was good. But with oil prices cut in half, it's almost like there's a Keystone pipeline open. Bloomberg reporter Noah Buhayar covers Buffett and Berkshire, and he joins us now. Noah, thanks for coming on the program. So, even Warren Buffett was unprepared for this big drop in oil.
Yeah, I think, one of the really interesting things to be said here is that Berkshire Hathaway's company has gotten so big that if you look across it, there are a number of ways that it's going to be affected by these lower oil prices. So some of the things you said in the intro, he's got his railroad, BNSF. They've benefited hugely from the onshore oil production in places like North Dakota. And it's a real question, if oil stays at this level, what that's going to do to volumes on the railroad. You also mentioned some of his stock picks. About 2 years ago, maybe a little less, he bought about $3.7 billion worth of Exxon stock. That's obviously been pretty challenged here in the last little stretch. And there are a number of other ways that it's affected Berkshire.
Let me ask you, first of all, about the railroad and the idea. Is it just conspiracy theorists who think that Warren Buffett was one big man standing in the way of the Keystone pipeline? Because it seems when you look at it...
Yeah, in a word, yes.
It is? It's so much fun,
yeah,
though, Noah.
But what's super interesting about this, and I get emails from readers all the time talking about this. What I find interesting is that he said publicly a number of times that he would support the pipeline. What I think the more interesting question is...
what he says publicly is less important than what he says behind closed doors, right, at the White House.
That may be, but what I think the more interesting point here is, just when that pipeline gets built, or if it gets built, what that is going to do to the crude by rail volumes that are going at BNSF. That's an interesting question, and it certainly remains to be seen what the answer is.
What's the biggest hit to him? I mean, is it Exxon and Suncor, or is BNSF the biggest problem here because they make so much money shipping this stuff?
Well, when it comes down to dollars and cents, it's probably a little bit too early to say. We certainly know the financial impact when his stock picks go down because that's pretty transparent. It's a lot harder to tell what the impact's going to be on the railroad. We don't know yet what the volumes are going to be. Frankly, we don't even have that great a transparency into BNSF's margins on those oil cars that they're shipping.
No, that's a good point. And obviously, even with the price drop, the wells that are running are going to continue to run, and what they pull out of the ground, they're going to continue to send by rail for now, right?
Exactly, and that's a great point. And one of the things that my colleague Tom Black and I pointed out in our article this week is that BNSF had huge congestion problems on its northern line last year, and that was a combination of things. There was a huge grain crop, there was a lot of oil being shipped, and they just got totally gummed up. And in response to that, they've been spending really heavily to expand capacity, and the question now is, can they dial any of that spending back to accommodate a change in volume on their railroad or not? For now, they've said very publicly that they don't plan to do that and that they're going to keep going ahead with their spending plan.